so much. I hope you guys enjoyed lunch. I'm not going to lie, the food did not let me down. I was very enjoying. I know that there's going to take a little while for everybody to get back from that food, so I'm going to use my unusually loud voice and just vamp here for a second or two while we wait for everybody to come back from lunch. What we have on store for today, for the next event I should say, is something that I think we've kind of been waiting for a couple of years, but it just hasn't really happened for various regulatory reasons and maybe even corporate maturity reasons. But the rise of crypto IPOs. It's happening. We just had, I think, a somewhat historic IPO, which I'm sure the panel is going to get into, so I don't want to spoil that conversation. But it's an exciting moment, and we have the right people here to be talking about it. The formal name of the event or the panel is The Rise of Crypto IPOs. Please welcome to the stage Stephan Lutz, the CEO of BitMEX, Jean-Marie Mognetti, the founder and CEO of CoinShares, moderated by Alex Irwin-Hunt of Global Markets Editor, FDI Intelligence. Gentlemen, welcome to the stage.
Well, good afternoon, everybody. Hope you had a wonderful lunch break. And what a way to kick off the afternoon with such a timely panel, as just mentioned by the MC. I think it's pretty clear, given that this is on the agenda, that the path to public markets is changing in the crypto industry. While initial coin offerings were once offered sort of a quasi-IPO route, many of them failed to live up to expectations. Now crypto companies are increasingly looking at traditional IPOs and hybrid models. And we've had many examples in recent years when you look at sort of the likes of eToro, Galaxy, and most recently, of course, Circle, massively oversubscribed. And I was just hearing from Cathie Wood that surprised a lot of the traditional finance industry at quite how much demand there was for Circle. So the real question here is, what does the rise of IPOs mean for the future of Web3 finance? And I have a great pleasure to be joined by two very eminent CEOs, Stephan Lutz, of course, CEO of BitMEX, and Jean-Marie Mognetti of CoinShares, to really unpack this question over the next 30 minutes. I think to start proceedings, let's just set the scene. I know there will be people who are in the Web3 industry here, so they'll be very well versed on this. But Stephan, I'd love for you just to explain what are the paths to capital raising in the crypto industry, and what is the main difference between an ICO and an IPO?
Okay, I'll take the lead here. There are a lot of similarities, but then there are a lot of differences. And the difference for me is an ICO usually is something that tries to fund you to build a product. So that means you take future expected revenues, you discount them to today, and then actually you redistribute later on again. So, and your users are usually the subscribers, or that was the original model. So potential future users are basically your subscribers, they pre-fund you, then you can run your project and everything's great in the end if you survive the time. An IPO in particular is slightly different. I mean, my background is in TradFi and capital markets. Usually it works best if you have a business model that you need to scale dramatically and that is very capital intensive. So you could say there is a similarity, but actually your investors are often not your users. So, and it needs to be capital intensive. So if you have large amounts of money that you need to build brand, technology, user base, then actually an IPO might be the better route because the governance is clearer than with an ICO, my take.
Perfect. So we've got that difference there. JM, let's talk a little bit about ICOs. Why did they fail to materialize in the way that people were hoping? And are IPOs a more sustainable option for crypto companies?
I'm not sure they completely failed. I think it was an interesting testing lab in 2018, starting 2017, 2018. And this testing lab works very well for some companies and didn't work for all companies. Now, you need to go back to first principle and remember that crypto has been born on the dream of libertarian. And so ICOs was really a way to reinvent the IPO model at the very, very beginning without trying to replicate everything like for like. Obviously, it has its limitation. Obviously, it was a first test. Many people won't remember CryptoKitties, which was probably the first real use case of Ethereum before anything else. And it was kind of a way to put some use on the blockchain. Is it perfect? Definitely not. Is it the first stage? Definitely yes. The kind of cynical people will say that all the work that are happening today on tokenization platform, collateral management, and fund management is kind of born from the ICO craze. So it was a test lab. It did its work. Innovation is continuing.
And I want to add to that. I want to call out a little bit of hypocrisy here. If you look at the IPO market historically, we always have a survivor's bias. We always see like the big ones that are really successful, and that's what we measure against. But if you look at all the listed companies in the world, I think there was a study last year, like less than 5% of the listed companies in matured markets make up 95% of all profits distributed. So it's actually not that different to the ICO market that we had. So I totally agree with you that it was a perfect lab and to kickstart things that are not IPO ready yet.
Let me actually come to you because you have, of course, IPO'd at CoinShares. How has being listed changed the way you operate as a company? What are the main benefits it's brought to you?
I think CoinShares was born, well, no, not I don't think. CoinShares was born as a trading house. And so our background is running a commodity hedge fund. And so realistically what happened is like it changed the mindset to move from a trading opportunistic background and an owner-managed business to a business which is governed by proper corporate governance and proper structured process and policies, which sounds extremely boring if I go in details, but which is kind of quite governs the way you sustain long-term and you sustain the adverse change in the market. So, CoinShares today is in a position, thanks to this listing, to be run in a way which is a very mature way for crypto company, and that we take as a kind of a first model.
And Stephan, to you here, why should crypto companies list? What are the benefits and actually maybe some of the downsides, and what are you thinking at BitMEX in that regard?
Okay, let me start with why listing. I think the moment you are more looking into serving the institutional space, into bridging between crypto and TradFi, and you have large capital needs, as I said before. An IPO is definitely an opportunity to look at. So this is for the benefits and when to look for. I mean, there is more, but generally this is directionally where I believe they will be successful, and you see the current IPOs that are scheduled in the US in particular are all in that case. They all try to bridge TradFi crypto. They all are very institutionally focused, and they actually will have capital needs now and in the future as well. So an IPO gives you the ability to fund even after you float it, right? So you can have capital increases, secondary offerings, etc., etc. That's the flexibility. I would say that if you call it a downside, you need to be actually in for the long game. If you list and you want to be successfully listing, you need to have a plan how to survive the next 10 years. It's not something, I'll just have an idea, let's float this stuff, it will go well. No, it won't. And for us as BitMEX, we look at those things as well. And in some parts, we would love to do that. I think for us, the question is, as I said, do we believe we have enough capital needs that justify diluting your investor base? That's basically it. If you have, you should do, because you can't solve it in another way. If you don't need the capital, I think for crypto companies, more something to consider and go into other directions.
Got to ask you now, JM. You talked about that need for thinking of the long term if you're IPOing. What's your experience been like? You obviously talked about the change of your nature as a company, but what was it really like to actually list, and how have things progressed since then?
Well, the funny joke is people told me that the day we IPO is the day I go on holiday, and actually it's the day I start working. because there is another level of work once you're a listed company, which is like you have your day job as the CEO of the company, and then you have your other job as the CEO of a listed company, which is taking as much time as the other one. So you just have to build a very solid team around you to be able to keep running that company. You know, if anything, pre-IPO, I was almost a key man risk for the company. Post-IPO, I become much more, less of a key man risk. And so we're in a very much better position for our shareholders. To go back to your point, Alex, on the capital need, there is also a question of transparency. Crypto has been tainted for a long time with bad governance and bad attitude from management. So, sometime when you have a fiduciary duty to your clients and to your investors, being a listed company, transparent, which report on a quarterly basis, is giving this kind of, beyond the dilution factor, obviously, is giving this kind of little kind of add-on of transparency and, I would say, grown up in the room and adult management, which is required, because crypto has been suffering from an absence of, I would say, to some degree in the early days, so talking 2014, 2013 to 2020, from an absence of management and a number of scandals, and so cleaning that up is very important. And to this date, we are still paying for that, and we are still explaining client that, yeah, the FTX days are gone, the kind of all the scandals are gone, and we're just kind of going up in a new era. So it is helping the narrative for sure.
Do you have like tangible examples of how that's played out in practice, where the add-on maybe increased legitimacy from being that transparent, the transparency that's brought from IPOing, where, I don't know, the perspective of CoinShares has changed as a result?
Yeah, like a simple example is like CoinShares was an investor in BlackRock Trust 91. BlackRock Trust 91 was I would say, private project, which was the pre-ETF work they did before launching the ETF. Which required us to get approved not only by BlackRock but by Bonnie as well. And without being a listed company, there was very little chance we had been able to contribute to this great project and to the great, indirectly to the great success BlackRock is today.
What about the downsides, right? So there's some benefits we've heard. You've mentioned a little bit about the types of companies and whether it fits for them to actually IPO. What are the downsides of IPOs for crypto companies? Why shouldn't they do it?
I'd say you shouldn't do if you're not ready for it. So JM really pointed out that the work actually begins once you list it, right? So, and I mean here maybe a second to understand the difference between floating and an IPO. An IPO basically means you really offer publicly. That means like what we see now, people are offered shares, they need to pay something in return, and usually it is distributed like between raising capital and buying out old shareholders. The more capital is risen, usually the better it is from an investor's perspective. So there is kind of a conflict of interest as well, but that can be bridged. This is not the thing. So you should be aware as a crypto company about this, and the mature ones are, and they can manage it. But after that, once you list it and you want to be successful, and then floating. Floating just means you make your shares available on an exchange. There is no share offering, no public offering. So you can buy them in an open limit order book, but basically it's more like OTC trading, and liquidity usually is low in those ones. So, and you have both. We talk about IPOs, which includes at least a level of raising capital. So when not to do if you don't need capital from my point of view, unless, as JM pointed out, you want to signal a specific maturity to your user group, which again is valued mostly by institutional customers. It's hardly noticed by retailers, not because they don't want to or they don't care, but they look for different things. For example, in crypto, our institutional customers, they ask for policies, procedures, they look for audit reports. They hardly ever ask for our proof of reserves and liabilities that we do twice a week. Our knowledgeable crypto native guys, they don't care for policies, procedures, etc. They just ask, can you show us actually how you handle security? Can you show us your proof of reserves and liabilities? Can you run with us through how you manage your treasury, etc.? And we're like, we're happily doing this. So it's again like, who's the target audience? Who do you want to do business with? What is your virtue signaling that you want to do, right? So But if you don't want to do virtue signaling, if you don't want to be caught up in what you say professional management, right? For good and bad reasons, I don't judge here. If you want to be able to pivot in your business model basically every half year, or if you say we don't know how we make growth work in half a year's time. Basically, if you list, especially in the US, you have quarterly earnings calls and you need to be better every quarter, basically, otherwise you're done. If you don't want to do this, don't list. If you're saying, that's what I'm in for anyway, go for it. And this is how I see the upcoming IPOs in the US with Circle and Galaxy.
I think, just to add on your point, the listing creates a very strong sentiment which is linked to your price action. And so you can end up spending a lot of time looking at the price and judging your action by the price, which is a terrible thing to do. So you know, a lot of companies end up being overvalued for a very, very long time. A lot of companies are quality companies and undervalued for a very, very long time. And so as management, you need to divorce yourself to some degree from the noise from the market, because otherwise you kind of stop moving because you keep being stuck by reporting on a quarterly basis. And sometimes you realize that this price action is completely decorrelated from the good action you do in the business or the bad action as well. So it has to be a kind of, you have to cut your own personality and become a little bit kind of divorce yourself from what the market noise says and what the market value your business, which is sometimes non-efficient and not realistic. So just need to be able to accept that and live with that and stop watching Bloomberg ticker every 5 minutes.
Well, so there we go. There's a change in the flexibility, some more regulatory pressure. The price signal is coming into the CEO's inbox every day. We've talked about the whys, the pros and cons. What about where? You're listed in Stockholm, and I know you've explored a listing in the US as well. Where is the best place for an IPO for a crypto company? And why did you ultimately choose the place where you have listed?
Well, the where is New York. There is no discussion about that. Like it's, if you can list in New York and you have the capacity to list in New York, it's a home run, do it. We were in a slightly different position when we started as a Jersey headquarter company on the UK GAAP accounting. You couldn't really fly to the US because of IFRS constraint. You were only open to the European market, and the UK was closed because the FCA was a massive anti-crypto regulator at the time. So we ended up in Sweden because our friends from NASDAQ were very supportive back then and very, very willing to see us listed with them. And it's part of the NASDAQ franchise, so we knew that, okay, when the company will be ready, a transfer to the US will be the next move.
What about you? You sit in Singapore. Is that maybe a suitable place to list?
Well, I think I'll tap here into my previous experience, which might be a little bit lengthy. So, but there are a couple of things to look at. I totally agree with you. Like it would be New York, but the reason, or not, but and the reason is because it is still and will be the biggest and deepest capital market in the world. So if you list, you want to get investors. Investors are where the liquidity pools are. Investors are where there are surplus funds, which is the US in the first place. Second thing is, basically, are those markets internationally fungible? And the US, it's not that easy, but it's possible. So basically, it's not only US investors, European investors, Asian investors invest into the New York markets as well. So this is all tick, 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 tick. There is something on top to consider. Are you familiar with the jurisdiction? So if you're, let's say, a company that only ever has operated out of Bangkok, and it's nothing against Bangkok or Thailand, right? So don't get me wrong. And you all of a sudden become listed in the US, you need to know everything about capital markets, law and jurisdiction in the US. You need to be able to play the game, I mean, which is a completely different scenario than in Europe, for example. If you have some disputes, completely different matter than here, completely different matter to other parts of the world. You need to be in for that and you need to know what it is. That might prevent you actually from not going to the US. And then there's a third aspect, and this is, where do you want, again, to signal where you are? Where are the right investors? As said, the US is by far the biggest market, and with everything that's going on, I think we will see a frenzy for the next 24 months, basically, before it calms down again. But still, if you say your user base or your target customer base is somewhere else, you might want to go somewhere else. So probably, and my Singaporean fellows will not love me for that, I don't think it's really Singapore. It would be rather Hong Kong, which is another geopolitical issue these days, but it would be rather Hong Kong. Maybe it's Tokyo, yes, then maybe Singapore, but on top of the list clearly are NASDAQ, NYSE, ICE basically in the US. Then you look at the markets here in Europe, basically Euronext, Deutsche Börse, but with FAR, it's somewhere else. I mean, basically when you went to Stockholm, for me that was a clear, I understood it because you have that more vibrant startup scene in Scandinavia as well, so it's somehow fitted not only where you can go, but going there. I mean, from the outside, I have been with you.
Stockholm at the time was the right decision for us. It is a decision which is becoming limiting for now, and so that's why we're moving away. Like, just adding back to the US, I think the US have another angle, which is the investor relation. You know, it's the biggest market, the biggest capital market, etc. But the way the competition happens on the number of companies you can invest in is forcing management to put effectively a proper investor relation program of great quality, because the competition is very important. So unless you are very ready to deal with the investor relation, and effectively takes time away from building to explain the company and talk about the company and develop the thematic thesis to an investor community which is pretty educated. You're not dealing with people who are not used to invest. A lot of people trade on Robinhood, but they trade knowing what they do. It's not just like buying and selling stuff on CNBC. So you have to be able to defend that and also take the crypto noise, because Twitter is very powerful in crypto, and a lot of companies get shielded on Twitter, so you get all this kind of peripheral noise happening. And you're listening in France, you know, nobody will care. You're listening in the US, the echo chamber is much bigger, so you have to be able to.
We're talking about the US. We have to discuss the Trump administration, obviously very pro-crypto, but at the same time, we've had a number of meme coins which have faced criticism. And equally, the route to IPO is boosting legitimacy, transparency, a movement towards a new industry. Is it a pro or a con with this new administration for the industry?
Okay, difficult territory. I'd say with regard to IPOs, there's rather an upside than a downside, as I said, for the next 24 months. For me, this is limited, but this is a different topic. I mean, we can speak about that for an hour. Why do I think so? You see, even crypto friendliness in the US basically doesn't mean everything's allowed. I think that's a misconception. What happened from my point of view, that's my read of the situation, we had basically someone saying, let's go back to square one and figure that out. Let's get rid of second order virtues or second order requirements that have nothing to do with the stuff itself. And this is what happened. This is what you saw. This doesn't mean forget about AML, sanctions, what have you. You're basically back to square one. If you now fail to comply with the regulations, you're in dire straits, I think. So it's not actually a reduction of quality. It's just resetting the stage and providing a level playing field. That adds opportunity to a lot of companies, and we see them tapping into it, which is great. But it actually means in 24 months from now it will be the same. I think everything else remains, as JM pointed out, deepest capital market, knowledgeable investors, clearly established ways of communication and transparency. So, and this is not something that's actually driven by the government. This is driven by the investors themselves. And they won't compromise from my point of view on that.
What about for you? Is the new administration a booster or potentially a hurdle to this movement of the industry to become more legitimate, transparent?
I think you need to differentiate the president and I would say the extended family action in crypto, which is one signal which is very strong and massively visible on the social media, and what the administration is doing, and by implication what the SEC and the other regulators are doing. It's public information. CoinShares was at the SEC last week for a meeting with the crypto task force, and we didn't really know what kind of people will be meeting there. It was the first time we're sitting down with them face to face in this new environment, and we were very surprised at how pro-business they were, whilst at the same time staying back to first principle, which is the perimeters they are used to operate within, and how to make these rules meet what we are trying to achieve. So they used to be also, as staff member, I think, generally frustrated by the not being able to interact more with the industry. And now you can see the dialogue is working much better. But it's not a dialogue just to say, oh, that's a problem. It's a dialogue for, yeah, this is an issue, but we're going to resolve it that way. And there is kind of people raising issue, raising problem with solution-driven approach, not just by spreadsheet says no, we can't move forward. So we're very much in a pro-business environment, which is a very, very big departure from what happened before. The simple fact that the IPO market is back on is the first signaling of that. The fact that you get more filing for ETF is the second signaling. The notes which come out last week about blockchain and staking and how staking should be accounted for and measured, which will trigger another IRS discussion. And that's the old issue about the US is you think one guy answering the question is answering the question, but effectively it's all a ping pong between what the Treasury say, is it the SEC, Treasury, IRS topic, or whoever. So you end up having multiple people who have dependency on it, and all the problems need to be solved by each vertical before you get to a final solution. So in short, it is very positive.
Okay. Just very briefly, if we could, because I'm conscious of our time, we have to discuss Circle. Just briefly, what were your perspectives on it? Were you surprised quite how well subscribed it was and how well they've done since they've IPO'd? Circle.
Circle, I wrote a piece on last Friday about it, and I think Circle is the first for Gambit cushion M&A action which happened in the industry. Circle has been toying with the idea to IPO for a while, and they were also frustrated by the former administration for a while. There have been fantastic relationship with different businesses like Coinbase and Circle and BlackRock, and all of a sudden Ripple show up with an offer saying we're going to buy Circle, and then Coinbase see, okay, well that can't happen, and then BlackRock say, hold on, wait, that can't happen either, and so it's a perfect investor relation game. So was your price end up trading in such a great way? So if anything, this kind of pre-IPO M&A activity has been very supportive of what happened with Circle today, and Jeremy has been a fantastic business, so congratulations to him.
Perspective on Circle, also we've had Gemini that's also exploring their own IPO. What's your sense of these?
Sorry. I think Circle is not surprising, at least not to me, to explain why. Circle really doesn't need capital as such. They could operate without, but they want to signal something, as Circle will be the pseudo operator of the digital dollar. So all the discussions about CBDCs you have, for example, here or in China, which would be a public service, will be provided by Circle in the United States, and I haven't seen any credible competitor to that. So this is huge. So it's clear that investors want to get in and want to secure a fair share of something that's a business model that probably spans over decades and just grows and grows and grows over time. So this is for me why it wasn't surprising. I think on Gemini it's a little bit different. There will be capital needs, at least in the future, if they will grow, because it's always not so much like capital intensive in terms of machines, but in terms of financial capital. You need to operate the business model, and you need to be able to fluctuate this. So not just fund internally via retained earnings, but as well tap into other markets and investors. So I believe it won't be as much oversubscribed, but it will be a success too.
I want to pick up on your point you made earlier about the libertarian ethos, where this industry originated from. Are public listings, embracing the public markets, kind of abandoning that original libertarian ethos? Is this embracing of traditional finance, moving away from where crypto was originally set up to move?
I think Alex, shareholder, has the best representation of libertarian movement in crypto these days, so he's probably in a better place than me to discuss libertarian. But when it comes to crypto IPO, I think it's a need, it's a requirement. If you want to scale this company and to scale the presence of crypto at a wider scale, you need the capital market, you need the adoption, you need the amplitude and the leverage it gives you to operate in a wider market, and the respectability as well, because ultimately you're engaging with firms which are also listed, and when you engage with like multi-billion dollars or $1 trillion bank which are listed for decades, the way you buy your credibility at the table is by also having the credentials. So, sometime being part of the club helps you get in the club. And, ultimately as well, if you think about the decentralized and fragmented nature of crypto, you will need to get people to be driving consolidation in the industry. As you can see, Robinhood, you mentioned earlier, through Bitstamp and WonderFi, was driving consolidation in infrastructure, and they're probably going to keep doing that way. Coinbase and Deribit has been signaling as well. Coinbase has been blamed for so many years about you're not doing strong acquisition, you're only buying distressed asset, and clearly by buying Deribit, they're signaling they have the muscle to buy anything they want at the price they want and judge fair. So the market is maturing, the industry is changing kind of like the level at which it's operating by just doing some distressed M&A to some real value accretive M&A for acquiring an acquired shareholder. And so you're really going to see that happening more and more. So the IPO market is required, the credibility it gives to the industry is also required, because don't get it fooled. It's not just validating the company itself, it validates the industry and how it is perceived. You go see Julius Baer in Switzerland, you go see QNB in Qatar. Like the fact you listed companies, okay, we can talk with these guys. They're not like kind of out of nowhere. So I think Coinbase benefited a lot from that. And so, the listing is not a divorce from the original crypto libertarian.
And in terms of talking about a pivotal moment, their entry into the S&P 500 is kind of a signal that crypto is here to stay. But very briefly, is the industry abandoning its original ethos?
No, it's not. But I see it with one laughing and one basically sad eye. I think it is very much in line. Why? Because crypto exposure now is opened up to a group that has basically forcefully excluded it from it before. All the usual retail investors of that world now can get a stake in that. And they have been excluded for regulatory reasons before. So this is good and actually within the ethos. At the same time, we exclude via the IPO route people from it that were actually the original target of crypto. So a retail guy in Bangkok again is hardly able to participate in the US IPOs, unfortunately, but we won't solve this in this edition of Proof of Talk and probably not in the next one. It's just the price that has to be paid.
Unfortunately, we are out of time. I know that we were just about getting started. We could do with another half an hour. But please join me in a round of applause for the fantastic panelists and enjoy the rest of the conference.